At the beginning of the year, Windermere's chief economist, Matthew Gardner, put out his predictions for what the housing market might look like in 2023. And here we are, halfway through the year, and Matthew has recently released his mid-year predictions. Let's jump in and take a look at just how middle of the year Matthew compares to Matthew from the beginning of the year. But before we jump into that, for those of you who don't know who I am, my name is Bella Chafee from Windermere's Chafee Real Estate Team. Whether you're looking to buy or sell in Kirkland, Bellevue, Redmond, or Snohomish, our team is here to help. Okay, let's get into it. First up, let's talk about home prices. Matthew initially predicted a fall in 2023, but things seem a bit different. As of April, year over year, that's 2022 to 2023, prices were slightly down by less than 2%, but they've rebounded impressively, showing a 6% increase year to date. So for everyone who was thinking that 2023 would be a complete collapse in the real estate market, the numbers have proven otherwise. That being said, Matthew stands by his forecast that the U.S. median home price in 2023 will be slightly lower than in 2022, but it won't erode as feared by some. To sum it up, house prices have increased since the beginning of the year, but are down slightly compared to last year. At least as of now, the market has not collapsed despite early fears at the beginning of the year. Moving on to mortgage rates. Matthew expected them to dip below 6% by fall, but unforeseen circumstances like the banking crisis and concerns over the debt ceiling have kept rates above 7% multiple times this year. The expectation now is that rates will remain above 6% unless a recession occurs, which he estimates has a 50% chance. With so many geopolitical events occurring throughout the year and the ever-changing banking crisis, it is difficult to tell when rates will go down. There's lots of talk of a recession that could severely impact interest rates, stock prices, house prices, and the global economy. But with the Fed continuing to combat inflation, interest rates have remained higher, but only time will tell what will happen. What I can say is that even if we do go into a recession, there are no signs that say we will experience anything to the severity of the 2008 recession. Now, let's discuss housing supply. Though we saw a slight increase in homes for sale during late spring, it's still only running at about 40% of its long-term average. Matthew explains this is due in part to approximately 25 million homeowners with low mortgage rates around 3% who are holding off selling. The housing supply situation is not likely to improve much this year. This puts some homeowners in a difficult spot as they feel trapped in their homes. According to Realtor.com, 82% of homeowners feel locked in by their existing low-rate mortgage. Some are calling it the golden handcuff effect, which is a term often used to describe financial incentives employers may offer to discourage employees from leaving a company. I get it though. It must be tough to give up your 3.125% rate for something that is double the amount in today's market. That leads us to the limited housing supply, which means that the market still favors sellers. Matthew believes that with persistently low inventory levels, the market will continue to favor sellers in most regions throughout the rest of 2023. If you're wondering what your house is worth, this is a great time to reach out to me today and I'll send you a free CMA. I know with all the AI tools out there, Zillow and Redfin may seem like the proper estimates, but even they admit that their pricing models do not take all necessary factors into consideration. They are great tools, but you should not put all your faith into the numbers they display. This is why working with an agent that knows your area is so critical. List prices were expected to soften, but sellers continue to be bullish due to inventory constraints. Although some cities have seen single-family home list prices drop between 30 to 50% from their 2022 peaks, overall, list prices around the country haven't softened as much as predicted, and they're likely to keep rising throughout the year. Which goes back to the previous point that it is a seller's market and that you need to know the true value of your home. Now, let's talk about the return to office. Thanks to COVID in 2020, we all got familiar with WFH or work from home. Many employees loved it, but now with COVID restrictions a thing of the past, lots of large employers are beginning RTO or return to office mandates. The pace of workers heading back to the office has been slower than expected. Only 42% of people worked in an office full-time during the second quarter of 2023, down from 49% in the first quarter. Meanwhile, offices with hybrid work environments rose to 30% in the second quarter. Matthew still expects more workers to return to offices, but it will be at a slower pace than initially forecasted. Why does this have an effect on the housing market? Well, with commutes and drive times now factors again for people, certain areas are beginning to feel price increases as people look to move closer to work. Whereas in 2020 and 2021, people were favoring suburbs and moving further away from the cities. New construction. As predicted, new construction activity has pulled back this year. Builders have seen new home permits and starts fall by double digits compared to last year. High financing rates and construction costs continue to impact this sector, and Matthew doesn't anticipate much improvement in the second half of 2023. Part of this is due to the high cost of materials, especially in the glass and wood department. Hard to build a house without those two materials. Matthew's predictions align with what we're seeing in the market. The areas where home prices rose quickly during the pandemic years are experiencing the most significant price declines. In contrast, areas that didn't appreciate as rapidly are still holding above their 2022 highs. Could RTO be playing a role in this? Quite possibly. But the important thing to note is that the crazy market we saw in 2020 and 2021 were not normal, and now the market is beginning to normalize. Affordability remains a significant concern. While some markets have seen price declines, they aren't enough to make housing affordable, especially with mortgage rates at their highest in over a decade. Unfortunately, Matthew predicts that conditions won't improve for buyers this year. Now, that isn't all doom and gloom though for buyers. If you're able to ride out the higher interest rates and refinance when rates inevitably go down in the future, you may just be that much better off financially. Why do I say that? Well, if you're in the market for a home, there's less competition and fewer houses going for significantly over list price. If you can swallow those high payments now, odds are you'll be better off than someone buying with lower interest rates in say 2 or 3 years that is forced to pay 15 to 20% over asking price. It's all a game of numbers and each situation is different, but don't be discouraged to jump into the market. Finally, in his 2023 forecast, Matthew highlighted the need for the government to address the country's housing shortage. Some progress is being made with several states pursuing legislation or creating task forces to tackle the problem. However, there still seems to be work to do. That's it. That's Matthew's mid-year update on the 2023 real estate market. What do you think? What were your predictions for the market at the beginning of the year? Did you think just like Matthew, or did you have your predictions that may or may not have come true? Let us know in the comments what you think might happen for the second half of 2023 in the housing market. If you'd like to read the full report, reach out to me today at bellachafee@windermere.com, and I will be happy to send it to you. Don't forget to like this video and subscribe to our channel for more updates. Until next time, this is Bella Chafee from Windermere's Chafee Real Estate Team. Happy house hunting.